Conqueror Trading and Investing. If you're new here, welcome. And if you're not, welcome back. We are going to do what we do best, take a look at the markets and make sure that we're able to stay on the right side, which is why today we're taking a look here at the Nasdaq and a potential distribution aligning. We'll take a close look at that today. We're going to start this session off with Bitcoin and taking a look at what's going on, and then we will circle back and take a strong look at what's taking place here across the Nasdaq and markets. You know, last week we did a video talking about expectations for the stock market into 2025 and even 2026 after we've seen back-to-back years of 20% plus gains. It's only happened 3 other times. We're going to talk about what our expectations are, and then we're going to talk about, more importantly, what's happening. Starting off and kicking it off here with Bitcoin, we could see Bitcoin first green on the day and now riding hard in the red, looking to test the low or testing the lows of yesterday's wick, cleaning up a little bit. We saw massive liquidations yesterday. We saw $863 million. This is coming after we saw over here as Bitcoin on the 5th had an even greater number of liquidations, both on the long side and on the short side. Well, first on the short side and then on the long side. A lot of people think that this is signs of unhealthy market. I personally think it's great to see a lot of that leveraged cleaned up, offering the opportunity here for the next move to evolve. We could see that right now. We have a couple of areas of interest. Before we even take another breath, before we do anything else, we have to make sure that we have over here the pointer. So let me go ahead and just turn that on, and then we will continue. So we got this structural resistance right now that we tested yesterday. We're testing it again this morning. A break of that then likely brings in the lower structural support over there. Now, you got to be careful of this wick over here and what happens around it. Wicks are funny things. As you take out if the wick gets taken out, by the way, a bullish hold for us would be not taking out the wick, but you can see as the structure is slightly moving upwards, putting in actually a lower high and touching the structure and then going ahead and moving up. That would be very bullish. But the other thing that could happen and catch a lot of people off guard is simply taking out the low of the wick. That could either then be there could be a lot of stops that are triggered and then price move up sharply. Or, of course, once you break and close below, we could be looking then at a test or retest much lower. Overall, the market continues to be extremely, extremely healthy. Today, we're looking at Microsoft was getting ready to take a look, shareholders to vote on whether or not they want to go ahead and adopt Bitcoin. And we see that they voted against buying Bitcoin as a treasury reserve asset. Pure speculation. That what's what we believed. We didn't think Microsoft was going to be the first. If you want to speculate, I like this. I think that potentially Mark Zuckerberg and Meta might actually be the first tech company to go ahead and be on the bid, and or Amazon might be shortly there behind it. When we look at what's taking place over here at the cash holdings, the fiat holdings, today Microsoft shareholders voted on being poor. Going forward, we might see some future adoption. Here's Meta sitting on $70 billion of cash. We look at Tesla holding $33 billion in cash and over $1 billion in Bitcoin. And you look over here and you could see that obviously Alphabet, $156 billion of cash. And there we go. There's Amazon, $88 billion. There's a lot of money from big tech that at any point in time could all of a sudden, once one begins taking Bitcoin as a reserve asset, likely there will be more followings, and likely that will just be the next phase in adoption. But right now, we are looking at, do you ever see in the 80s, the Rocky movie? Russia versus US. And who's going to be the first to establish a Bitcoin strategic reserve? We're seeing that Russian State Duma Deputy Anton urges Finance Minister of Russia to create a strategic Bitcoin reserve. Now, look, Brazil proposed legislation. The US has proposed legislation. And here we have Russia at least talking about it. At least talking about whether or not they're going to or not. There is actual nation states at this point seriously consider taking a Bitcoin strategic reserve position. This was not something even in the vernacular going back 6 months ago. And now all of a sudden it's continuing to accelerate. And then you see Eric Trump just spoke in Abu Dhabi today, and he was saying, and on the slide deck, look over here. He's talking about, making America great again. He's talking about his father, and he says who pledged to add crypto to the United States Treasury. Very, very, very interesting times we live in. Indeed, there was talk yesterday by Alphabet CEO introducing Willow, the state-of-the-art quantum computing chip with a breakthrough that can reduce errors exponentially as they scale up with more qubits. Crack it like one qubit, a lot of errors. You add another qubit, less errors. You add 4 more, lots less errors. Cracking a 30-year-old challenge in the field in benchmark tests, Willow solved a standard computation in less than 5 minutes. It would take a leading supercomputer over 10 to 25 years, far beyond. Unbelievable over here. And you can see that Willow now looking at 105 qubits. People are worried, or does that mean that we're looking at Bitcoin encryption being cracked? It would take roughly, right now, it would take 13 million qubits to achieve decryption within a 24-hour period. Now, there are other things out there and lots other more valuable at this point in time assets than Bitcoin that people could look to crack if they had this type of power and they wanted to actually go after assets or do something like that, and or including things like nuclear codes. But point being, we're still making progress here, and we're still a really, 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 really far away before looking at even the potential to pose a legitimate threat to Bitcoin. And of course, Bitcoin at any point in time could be forked and made more, let's say, protective against any type of threat that might be out there. This was kind of neat. I mean, this is a little bit crazy. Inside Google's release, they talk about quantum computation occurs in many parallel universes. What? In line with the idea that we live in a multiverse. A prediction first made by David Deutsch. What? I don't know. Absolutely crazy skates to say the least. Watching today, Bitcoin over here again on the defensive price action, but we did see inflows yesterday into the ETFs, $479 million worth. Very interesting to see what occurs today. Now, that exit on Bitcoin looking like a champion here as Bitcoin is now down a few $1,000s more. We're out on the sidelines waiting for the next opportunity. Unless you're in a CTM bull run, still holding comfortably well into profit over here at this time. Also yesterday, a little bit of inflows, a little bit more black into the Ethereum ETFs. And we could see over here that Ethereum here putting in a big red candle. Actually, a lot of altcoins put in a very big candle. You see Bitcoin dominance rising over 3.5% in 24 hours. I don't think there's much to read into that right now, but I do think that if we were to see something like further progression of like Russia, US, or anyone else actually taking a strategic reserve position, Bitcoin dominance is headed towards 70. And that's not a bad thing for alts because there will be plenty of alts even during that phase that outperform Bitcoin. It's always alt season. Pick your alts wisely. And at the same time, Bitcoin would be the rising boat, the rising tide that lifts all boats, even the ones that are faster than it. And that would only give way the further that Bitcoin ascends in a healthier fashion for an even more robust altcoin, alt season when it does arrive. So all of that remains in check. Ethereum here, closing the trade finally on CTM 2.0, a nice little 35% scalp out of the market. We're looking here again, all reset and on the sidelines. Cardano still holding this open trade. Cardano has a long history of doing this. It's per expectations. You can see it was up to 259%, giving back now about a third at 150. Every single big trade out of Cardano has done the same thing. Here we go. I'm looking for some big ones. Here's 251%, same run up. And you can see it closed at 199. Here's 918% open unrealized gains, only taking 671. It's how the algorithm is designed to be able to best navigate Cardano. And then we're looking at Solana here, also now on the sidelines. We saw the daily template taking that profit over here and closing out with a nice 40% gain. And here we are ready to talk about the markets and what's going on as we potentially see. Bum-ba-dum. Let me load up a couple of slides and get going over there. Jordan, thanks for the knowledge. You taught me about Bitcoin in 2020 when I was 19 years old, and I built up a substantial amount of money because of what we were doing in the ways. Dan, that's absolutely awesome to hear. I received a message this morning. Big shout out, my boy over there, Philadelphia, talking about. Listen, I know how to navigate markets. You taught me how to navigate markets. I partake, and I'm here in the community because who else understands what it is that we're doing? And it is what formed me. Absolute beautiful stuff here. Let's take a look at what's going on here with the Nasdaq. And you could see we were setting this up before the breakout above here. And we were looking what would happen if we broke up. Do we set up a possible distribution? To rewind a little, this is an inverted chart in 2020. On the low of 2020, I drew this inverse Wyckoff distribution, and I labeled it. And I said, I wonder if that's accumulation taking place. Sure enough, on the breakout, we saw a big, massive waterfall. We said, you know what? Let's line it up. Let's take a look at it in real time right now and see. And here's the schematic over here. Right now, where we are right now, potentially. By the way, it doesn't need to be horizontal. A lot of people are very square. It needs to be horizontal. Trend lines are always much more powerful and accurate. And you could see even on a Wyckoff accumulation, it was occurring horizontally, which is what we're seeing potentially right now as well. This occurring with trend lines, not horizontally, excuse me. And just to bring back this point over here of where we are, you have the PS, right? The CZ, you can see the higher low over there, and then the LPSY. And potentially, that's what's forming right now. It does work out to be, so far, pretty bang on. Here's the schematic so you can see it. Now, the caution here, or my expectations I see, is that we hold and resume forward. This is going to be invalidated if we take out the high this week, 21,700. Tomorrow is CPI, the last bit of data before the Fed meeting on the 18th. Right now, market's pricing in 89% chance that the Fed cuts. But I think more importantly, as the markets are forward-looking, is what are they going to do after? Assuming they cut this month, what happens afterwards? Are we going to hear Powell with a lot of language that we are data dependent and we don't really have an idea and we're just going to wait and see? We have the ability to take a wait and see approach. So that's what we're going to do, likely, and keep the markets guessing. Now, a very hot inflation print potentially could take off, I suppose, the December cut off the table. If that were to happen, the markets might be under a little bit of a panic situation. There's no question about it. Now, if this indeed, if we do take out this support over here, and if we say that we're potentially putting in that LPSY, the next thing that we're looking for would be a move towards and below this resistance area that we're highlighting, right? That's the next thing we're look at. And then sometime after, we're looking for a retest. Now, we would like for it to be exact, meaning a retest of this line over here. You can see the retest coming in, and that's what we would look for. Jumping down over here, you can see that there's where it occurred, the retest of the line after the LPSY. We saw a retest of it, right? And then look at this test over here. It came in as well, right? And in a perfect world, that's what, or the things that we would look for if we were indeed going to see or are seeing some type of distribution occurring right now. There are some people pointing to the low value on the Mag 7 and saying that, well, no one is buying. Well, I mean, if no one is buying, that's one thing. If no one is selling as well, that's what you have to watch out for. Because if the volume is drying up and no one is selling, well, that's okay also, I suppose, right? And then we will see likely as we get towards the end of this month, Santa Claus rally starting right around the 19th, 20th of December over the last 100 years. That's when you've seen the Santa Claus rally begin. Well, so that would be the important piece to watch. Is buying or selling occurring in this area? And in an area that is historically very favorable for inflows, are we seeing buying coming into the market? So I think this is a great, good awareness, a little premature though. Over here, we were seeing other things happening, like the Fed pivot their policy and began tightening. They began tapering their QE. And then not only that, then they began raising their rates. And you saw risk act appropriate. Right now, we've seen the Fed begin cutting. Jordan, as soon as the Fed begins cutting, that's when the markets are in trouble. Not even close, not at all. That's not how this works. Actually, it depends. Are they cutting into normalization? And if they're cutting into normalization, right now Atlanta GDP is actually increasing their forecast. You see over 12 months or 12 months out, S&P 500 on average is up 13%. Now, if they're cutting into a recession, that's another thing. Then 12 months out, then on average, S&P is down 11% 12 months out. And if it's a panic cut, you remember a panic cut, what we saw in March 2020, cut down to zero as quick as you can so that you could start QE. At that point in time, a year out, 12 months out, you're looking on average S&P up 17%. So it's not like when they cut, you're in trouble. It's what's happening with the economy. And that's what remains to be seen. Nevertheless, even though my expectations are that we are going to be able to take out this high, continue rising and going up, it might not be pretty and it might not be as we might break down first, come in for the retest, and that retest might fail. I mean, that might not hold as a resistance. We might break above it then. It's going to be fluid. We're going to make sure that we stay on the right side and do it together in real time. But let's go ahead and add in some more awareness. We had this beautiful trend line break, right? And that was, everyone is so bearish and I'm bearish, but close your eyes. And then we had the confirmation over here. And then we said waterfall, and waterfall has occurred indeed. Now, let's go ahead and do the same thing. We're going to do two things over here. The first thing we're going to do is, hey, let's stick with what works. Let's go for a confirmation of a simple trend line break. Do you remember back over here? This was before we really honed in on structure and what structure was. But we still, if you go back to the like January, February, March 2020 videos on CTM, we still had the structure of the Nasdaq. Even at that point, it was kind of just undefined of what it is and what we were doing. I'm going to do two things over here. First, I'm going to start over here at the bottom, and I don't like that, and I'm going to stop right now. I'm going over here. This is where we started establishing the structure, and I'm going to just go ahead and just give myself a line like this first, right? And that's pretty ugly. I don't really like it. Maybe if I come on the daily, I could get that a little bit more más bueno. And I'm not looking for structure. I'm looking for a trend line break. And I could say, well, okay, like that's a trend line break. And you know what? From that point on, And even if you had from these two touches extended out, we never had a buy impulse into the market. Yeah, I guess it's not really that clean and I don't like it. I'm going to go ahead and go off of these two over here. This seems very clean to me, like that. And I say, well, that's very early. We had two touches, the breakdown, that looked a lot better. And then I want to come over here and just take a look. You know what? I think that's more authentic. I like that one better. The 1-2 touches, the 3 touches, and then over here, the breakdown. I would like to go back to those early videos and take a look at what the structure actually was over here that we were using, because we had pretty strong, intricate trend lines of what the real structure was. It's pretty close now. Let me just go ahead and try this to confirm it. I'm just going to go off of, see, that's not right. That's not right. I'm not going to let it go because I can't see it. I can't find it. But I do want to put in a trend line down over here where we are today. So I'm going to start and I'm going to go with a simple trend line and go ahead and say, look, this would be late, but at the same time, we want to look at that. We have 2 nice touches. We have 1 touch here, another touch right over here. This right now is coming in, let's say, for example, 19,500. And then if this is indeed a Wyckoff distribution that's occurring right now, it's too soon to tell. But if it indeed is, and we were to see any acceleration of this, the real confirmation, the real trigger for most people would be on the breakdown over here, right? It's very late, I think. I'm looking at it like this way. We just looked at 19,500. The schematic's a little bit my way. Let me get it, let me push it down. That's the 19,500 line. That's what we're going to use as to say when indeed we were seeing confirmation. I was looking for a little bit earlier. Obviously, this is the earliest that you could see in the market if you were to lose this and hold that. But this is still just setting up. We need to stay on the right side. So I'm going to go ahead and just try to do a very early warning sign on a breakdown of this trend line, right? But no, I don't like that because likely even if we break down here, come below this line, we're going to still kick up and retest. So it's too early to be looking to pick any type of reversal. Now we're watching for a reversal. My expectation are in 2025, we're continuing. The bull is going to march on. However, I don't want to be caught off sides. So I'm watching for a reversal, and I will be watching for a reversal with you, and as early as possible, for real legit confirmation. And again, this is where we closed our eyes. This was our confirmation, and a break up here. I mean, that is, I'll go from the high one, a nice 50% move. Look, we'll take it all day long and call that slaying the move if it is to end. That would be the earliest that we could say, look, things have turned. And right now we are actually have to turn very bearish. If you look at the daily time frame right now here today, though, we could say that yesterday we had a big sell-off. This morning, coming up, testing towards the top end of the bar, and bulls were not thus far been able to hold on. Now back testing towards the lows again, ahead of CPI data, which makes it difficult because major news release coming into the markets right now. However, we want to follow the technicals. If we take out yesterday's low, regardless of the CPI tomorrow, there could be some acceleration to the downside ahead of that. Look, Jeremy, if there's some people looking at and saying right now on a quarterly, looking at a quarterly chart, S&P 500 is getting ready to go lit. Here's the Nasdaq on the quarterly chart. And like, by the way, if you're looking at this chart in 2018, and I remember so many people, first of all, here's what was happening in that time. So the amount of the amount of people who continued and continue to be in disbelief of this move happening because they had just spent the last decade in this type of regime were manifold. Markets ripping up over here. Markets from the all-time highs here after taking out 5,000 are up right now 50%. People thought that the markets have come too far too quickly off of the low. Markets are up 800%, right? And then what you saw was a little bit of a shakeout, and then markets ripping to where 20. I mean, there you go. That's the November 2021 high over there. Markets continued to rip up. So from where we just tracked it, from 7,000 to there, markets went up another 113%. So when you look at the market today, or if I look at the market today, I say, well, that's the markets are going vertical. They've come too far too quick. But if we're talking and it's possible, if the markets were able to do something, markets just put in 2 years in a row of 20% gains. What happens if the market puts in over the next 2 years another back-to-back 20% gains? You're looking at all of a sudden 30,000 on the Nasdaq. Is it in play? Yes. Is it in play? Will we have something like this little bit of a pullback and or shakeout ahead of time? I have no idea, right? That was a nice 30% correction. That's a big correction on the Nas. Is that in play? Could that happen? I imagine the quote was towards the S&P 500. So you have some people pointing to and saying, well, when the RSI gets extended, it has further to go before it peaks. You could be looking at the roaring 20s, and you could see S&P climb another 200% from where it is right now. I mean, anything's possible. It's the markets. And if we were to see a massive devaluation, I imagine it's in play and could happen. But between that, like, you ever see the chart of the price of gold during the collapse of the Weimar Republic? And there were massive, massive moves in each direction. The volatility was tremendous. Even if we're going up from here, I don't think that it's going to be straight. We got to navigate it. It's a little too far for us to take a look at right now and see what might potentially become. But if we're seeing the actual Nasdaq break down and come off, at that point in time, S&P 500 is coming with it. Likely Russell would be leading the way down. And don't forget, big tech here has the best earnings. S&P 500 would be under very, very strong pressure. What would happen to Bitcoin? You know what? Bitcoin is the outlier here. Bitcoin is highly correlated here to the equities, to the indexes, to risk. It really depends on what was happening with adoption. If we are seeing nation state FOMO actually go from like talking about it to action and underway, at that point in time, regardless of what's happening here in the markets, that likely is going to help stabilize Bitcoin. And we might see something for the first time ever where Bitcoin actually acted more like a risk off asset in a time like that. That would be possible. That's dependent on actual supply and demand. People are not selling. If more and more buyers are coming in, the adoption continues to increase. The drawdown on Bitcoin in relation to what past drawdowns have been to like when the NASDAQ corrects 20-30% would be lesser than we've seen in the past. We do believe that. Look, we're headed towards 40K on the NASDAQ. It's going to happen likely by the end of the decade. What happens between here we are today and getting there, that's what we're going to navigate together. This is an awareness point. It's an important one. It's a strong one. I would like for this to be invalidated. I would like to be able to see us go ahead and take out 22,000. Well, let's stay strong. Let's stay on the right side. Everyone, have a beautiful day. God bless you. I'll see you all back now on the inside.